Securing a loan for your modular home can be an intimidating journey, filled with uncertainty and fear of the unknown. Many potential homeowners feel overwhelmed by the choices and complexities involved. In this video, we will simplify that process, providing clear and concise information on your financing options so you can move forward with confidence and ease. Let's turn your dream of owning a modular home into a reality without all the stress. My name is Marc Devisse, and welcome back to the Tri-Town Construction channel, where we are rebuilding Southwest Florida one home at a time. Understanding modular homes. There is a big misconception that modular is similar to mobile. Totally false, and it's a huge discussion to have with any financial institution that you're looking to get a loan from. Modular homes are built in a controlled environment with the proper tools needed to build, so there's consistency and quality on every home. They are all the same. Think about McDonald's. Every burger is the same. That is what modular construction is. They are built in a controlled environment. They're fully customizable. We can make different rooms, different sizes, different colors, but the overall construction is done in a consistent manner. It's very important when you're dealing or talking to the bank that they understand the difference. And sometimes it takes education, because a lot of banks believe that they're mobile homes and they will not finance mobile homes. If you're looking to finance a modular home, it can be done. It's done every day. So there are banks out there that will help. Small community banks are starting to understand the value of modular. It's safer, it's quicker, it's more quality. There's less chances of issues arising during the construction process. There's less chance of the builder going out of business halfway through a home being built and the bank being stuck with this loan on a home that can't be built. So the more the banks realize and are educated on modular homes, the more they like lending on them. If your bank hasn't been exposed or hasn't heard of modular, there are other banks out there that can help. Traditional mortgages. With modular, there's two ways that we've seen work best with financing. One is personal line of credit, getting the modular paid off, and then applying for a traditional loan. The benefit in here is a lot of times interest rates are lower on a traditional loan than they are on a construction loan or any other kind of financing. Once the home is built and set and turned over, there's no rule, law that you need to mention that it was a modular home. It's just a typical home built and ready to get a loan on. So we found a lot of our clients either personally funding and or using some kind of line of credit, home equity on a separate home to finance the modular. Once the home is built and now it's a single family home, they get a mortgage on that home backed by the property, and they're able to get a very good interest rate and be able to get financing on a single family home. There is no rule or law that states that you need to say it's a modular home. It's a benefit to say it's a modular home. It's becoming a benefit. Many people understand that the quality, that the finishes are better than an on-site build. But if you don't want to mention in the resale, in getting a loan, there is no reason to mention it. Speaking of innovative housing, I've put together a comprehensive ebook that dives into more details about modular homes, including design options and sustainable features. This free guide is packed with great advice and tips. Click the link in the description below and download it now. Construction loans for modulars are a little different. Many times the modular needs to be paid for before being delivered. The modular is the majority of the cost in the construction. So banks don't usually like to give 50, 60, 70% of the home value before they see any progress. This is where communication must happen between the lender and the homeowner and the builder. Once the education is there and they realize that, hey, this is being built on site, and just because it's not on site yet doesn't mean that it's not being delivered. Most banks are now opening up to that idea and are actually preferring building modular over a site-built home. There's a lot less risk, a lot less can go wrong when it's built in a controlled facility than when the home is built on site with weather conditions, with labor force conditions, with just anything that can happen on slight injuries, anything that can happen on site where not in a controlled condition. The benefits of a construction loan are that the bank is loaning the money and there's no out-of-pocket or minimal out-of-pocket expense. Usually banks are looking for 30% equity in a rental home. Single family is a little different, and if it's your primary residence, it's a little different. So in vacation homes, they're looking for about 30% equity. So if you own the land free and clear, that can be used as equity, or it's on the total value of the project. So it would be the construction and the lot, 30%. They will loan on both as long as you have good credit. As long as you have some kind of cash flow, they will loan that money and you can get in with 30% equity. The drawbacks of construction loans is sometimes the interest rate is a little higher than a typical mortgage after the fact. So the access to money is there, but the interest rates can be even higher than what we have going on here in the nation. Interest rates can be a little bit higher. I gave you a great overview of everything you need to know to finance your modular home. That's why I filmed an entire series that goes deeper into each one of these topics. Click the video on the screen right now and let's start your journey.